Hey everyone, welcome back to another episode of Mind Over Markets, where we dive into the stories behind the people who shaped the financial world and the psychological lessons we can all learn from them. I'm James, and today we're exploring a story that's part brilliance, part tragedy. It's the story of Jesse Livermore, the man who beat Wall Street and then ultimately himself.
Hi, James, and hi to everyone listening. I've been really looking forward to this conversation. Jesse Livermore isn't just another figure from financial history. He's like a living case study in how our emotions can both make and break us in the world of money.
Exactly. Livermore's life is almost cinematic. Imagine this, a kid born in 1877 on a small Massachusetts farm. He leaves home at 14, walks into a Boston brokerage firm, and within a few years, he's reading ticker tape like a magician reading the stars.
Right, and by the time he was 20, he'd already made his first $1 million. But here's the twist. That early success planted something dangerous, this illusion of invincibility. It's almost like the first taste of victory became the seed of his future downfall.
That's such a powerful point, and it's interesting how even in his early days, Livermore was already showing what would define him later, the mix of brilliance and recklessness. He started out trading in what were called bucket shops, basically small-scale betting houses where people speculated on stock prices without owning any shares.
Yes, and that's where he developed his uncanny ability to predict market movements. But it's also where he learned something else, how emotional crowds can be. The psychology of those tiny, noisy rooms mirrored the psychology of Wall Street itself. Fear, greed, panic, euphoria. It was all there, just condensed.
And he learned to read it, right? He could sense when people were acting on emotion rather than reason. But even with that insight, he wasn't immune to it himself. His first big loss came in 1901 when he bet against a rising market and lost his $10,000 stake.
Exactly. That moment taught him what became one of his core beliefs. The market is never wrong, but traders often are. That humility, that awareness that the market doesn't care about your opinion, that's something modern investors still struggle with.
Let's talk about the 1907 crash, because that's when Livermore really became a legend. While everyone else is panicking, he shorted the market and made $3 million, a fortune at the time.
That's about the equivalent of a few hundred million today. What fascinates me is how he stayed calm while others were losing their minds. That kind of composure under chaos shows the power of emotional control. It's the opposite of what most people do under pressure.
And yet, just a year later, he lost everything again, this time following a friend's advice. It's so ironic, isn't it? One year he's the man who reads the market like a prophet, and the next he's bankrupt because he ignored his own system.
It shows how fragile our discipline can be when emotion enters the picture. That's why one of his most famous quotes still resonates. Markets are never wrong, but opinions often are. When we get attached to being right, we stop seeing reality clearly.
It's like a mirror, isn't it? The market reflects human emotion. Livermore understood that long before behavioral economics existed.
Totally. He saw fear and greed as the two forces driving every boom and every crash. He once said that Wall Street never changes because human nature never does. And that's so true. Even with all the technology today, we're still battling the same emotions he was a century ago.
Let's pause on that for a second, because I think this is where Livermore's story becomes timeless. Technology evolves, algorithms, automated trading, artificial intelligence, but human behavior doesn't.
Right. We might have faster systems now, but emotional errors haven't disappeared. They've just been digitized. FOMO, overconfidence, herd mentality, it's all still there, only amplified.
Exactly. If you think about it, even with algorithms, humans are the ones designing them, feeding them with our biases, and reacting to their results. In a way, we've just built a faster mirror for our own psychology.
And that's what makes Livermore so relevant today. He believed that mastering your emotions is more important than mastering the market. He once said the trader's worst enemy isn't the market, it's their own humanity.
That line gives me chills, honestly, because you can see how it played out in his own life. Every rise and fall was tied to his mindset. His fortune in '07 came from discipline. His downfall in '08 came from impulse.
You know, I see a lot of parallels between trading psychology and everyday life decisions. Think about it. Fear makes you leave opportunities too early, while greed makes you hold on too long. It's not just about money, it's about relationships, careers, everything.
That's a great point. It's all about self-awareness. In fact, one of Livermore's key lessons was self-knowledge prevents ruin. He believed that before trying to understand the market, you have to understand yourself.
Exactly. He struggled with depression throughout his life, and that emotional instability played a huge role in his downfall. It's heartbreaking because he knew what he was doing wrong, but he couldn't always stop himself.
Right, and that's where we get into the psychological price of wealth. Success isn't just about making money, it's about having the mental balance to handle it. Livermore made $100 million during the 1929 crash. That's over $1 billion today. But the guilt, paranoia, and stress that followed destroyed him from the inside.
He became almost paranoid, didn't he? Afraid that people blamed him for the crash, even though he wasn't responsible for it. The emotional toll was unbearable.
Yes, and he once said that every market victory came with a hidden cost: mental exhaustion, self-doubt, isolation. It's a reminder that chasing success without balance can lead to self-destruction.
So let's go through some of his key emotional lessons, because even though his story ended tragically, his insights are pure gold.
Absolutely. Let's start with the first. Emotional control is your greatest asset.
Yes, Livermore said fear makes traders close winning positions too early, and greed makes them hold losing ones too long. It's about discipline over desire.
Second, patience builds wealth. I love his quote, "Money is made by sitting, not trading." It's so counterintuitive, but it's true. Sometimes the best action is no action.
Exactly, the world rewards movement, but markets reward timing.
Third, don't argue with the market. He said resisting the trend is like swimming against an invisible current. The market doesn't care about your opinion.
Fourth, self-knowledge prevents ruin. Know your limits, know your triggers. If you're trading or making any big decision without understanding your emotions, you're walking blindfolded.
And fifth, never average down on losses. Adding more money to a losing position isn't confidence, it's denial.
That's so true. I've seen that behavior not just in investing, but in everyday life. People double down on bad choices just to prove they were right. It's human, but it's dangerous.
Let's make this more relatable for listeners who aren't traders. Say someone's running a business or managing their career. How do these lessons apply?
Great question. Think of emotional control as your ability to stay calm when things go wrong. Patience is about waiting for the right opportunity instead of chasing every shiny thing. And self-knowledge, well, that's knowing when to stop, when to pivot, when to say enough.
Exactly. And don't argue with the market translates to don't fight reality. If the situation's bad, pretending it isn't won't help. Acceptance is the first step to adaptation.
That's right. Livermore's lessons are universal because they're not about stocks, they're about human behavior.
I think my favorite part of his story is how it mirrors the modern world. Today, with crypto, meme stocks, and online trading, we're seeing the same psychology play out. People think this time it's different. But as Livermore said, it never is.
Totally. We saw it with the dot-com bubble, the 2008 crisis, and even in the crypto boom. The technology changes, but human nature doesn't.
That's why he said Wall Street never changes because human nature never does. Every generation believes it's smarter than the last, but emotion always catches up.
You know, if Livermore was alive today, he'd probably be fascinated by algorithms. But I think he'd still say the most important stop-loss order is the one that protects your mind.
That's a great line. Protect your mind before your capital.
Speaking of which, one of his later realizations was that the market wasn't his real enemy. It was his ego. Every time he won, it fed the illusion that he could control the market. Every loss made him desperate to prove himself again. That's the cycle of risk addiction.
And that's not just about traders. That's about anyone chasing validation through success. Whether it's career achievements, likes on social media, or money, it's all the same pattern.
Right. You win, you feel powerful. You lose, and you need another win to feel whole again. It's a psychological loop that can destroy people.
Livermore's final years really showed that. After his 1934 bankruptcy, his depression deepened. In 1940, he took his own life, leaving a note that said, "I am tired of fighting." It's haunting.
It is, but it also underscores how critical emotional health is, especially for high performers. The higher the stakes, the heavier the mind's burden.
Absolutely. It's a reminder that success without peace isn't really success.
If we had to sum up Livermore's story in one lesson, I'd say it's this: master yourself before you try to master anything else.
I love that. And I'd add, be humble before the market, and it might just reward you.
Beautifully said. I think if Livermore could speak to us today, he'd tell us to slow down, trade less, observe more, reflect before reacting.
Yeah, and maybe he'd remind us that wealth isn't the goal, balance is.
Exactly. Because as his life proved, talent without emotional stability is just a slow path to self-destruction.
So, what are our takeaways for today's listeners?
First, learn emotional discipline. It's your ultimate edge.
Second, be patient. The right opportunities don't rush.